Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Wednesday, July 31st, 2013. Well, a continuation of the trend to the upside today in a candle that's made a higher high and a higher low. Previous day's trading we had that trend change technically to the upside on a spinning top type candle, an indecisive candle, and here today we've seen the trend continue to the upside. Having said that, however, we have another very small black body candle, and that suggests that even though the trend is to the upside, once again the sellers have made a small amount of net bearish progress, and what we'd like to see for confidence in this trend continuing to the upside would be the buyers making that net bullish progress rather than the sellers making progress. So this does suggest that all is not healthy with the trend to the upside. We have seen the sellers close with control of this market today. They've closed down around the low, and that suggests that they've taken fairly strong control and does set this market up for a potential change of trend to the downside. Now if we look at this large shadow on the top of this candle, we've seen the market basically testing to around the 1700 round number level of resistance and being strongly rejected from that area of resistance and closing down below the 1687 level once again for the third consecutive trading day. Now this does suggest that the area in a zone between 1687 and 1700 is very solid resistance, but by the same token very solid support extending down from that 1687 level down to 1675, so a market that's really bound between strong resistance overhead and strong support down below. In terms of a pattern here, this is a potential double top, and that's where we have a prior uptrend. We have the two peaks with an intervening trough, and the two peaks roughly around the same level. What we're looking for is confirmation with a close down below that intervening trough, which is at that 1675 level, and the target would be the distance between the peaks and the trough extended down from the breakout level. So that gives us a target roughly down around this previous resistance around 1654 roughly. There's no confirmation of this yet. As I've mentioned, confirmation with all of these patterns is a close above or below the barriers, so these double tops need the close down below that intervening trough, so we're looking for that. There is a possibility of that happening with the buyers not supporting this trend once again and the sellers taking control, so let's be aware of that. But certainly the potential downside may be limited because this highlighted zone is a large zone of potential support for this market. In terms of the Fibonacci extension, here today once again we've seen the market testing above the important 61.8% level, testing to and just beyond the 78.6% level, being rejected in a very strong manner with the sellers taking control in an uptrend, suggesting that there is a good possibility of a change of trend to the downside. And with the Fibonacci retracement here today, we've seen the market test exactly to the 100% level, being rejected from there. No change of trend yet, but with the seller supporting the short-term dynamics, it is a good possibility of that change of trend. In terms of patterns in the market, I've just readjusted the boundaries of this little wedge type pattern that had been forming. It's not an ideal pattern because the extent of the downtrend leading into the pattern was really quite minimal in relation to the size of the congestion area, so not quite ideal, but we will still be looking for a breakout down below that bottom barrier and a close below there. I'd like to see a bearish close to give us a greater confidence in this breakout, but certainly a close up above the upper barrier would suggest a market trading to higher levels. It would essentially be a close up above that round number 1700, so let's be aware of that. But these wedge patterns, when they tend to move against the prior trend, they tend to be continuation patterns, but really, as I've mentioned, not an ideal looking pattern because the size of the pattern compared to the trend leading into it is too large really for it to be a significant pattern. In terms of Ichimoku, we have a bullish market in the long-term time frame. We're trading up above the cloud, and we are trading a long way above the cloud, so quite a bit of disequilibrium, but this market has been congesting and certainly doesn't look as though it's attempting to retrace back towards that area to find equilibrium. As we move into the next few weeks, the cloud will be moving up towards where the market's trading at the moment, so we may not see a retracement. We may actually see the equilibrium suggested by the Ichimoku cloud move up to meet the market. So that's an interesting thing that could happen in this market. In terms of the Kijun-sen, the pink line, the market is still trading up above there, so we have a bullish market in the medium-term time frame, and that's now ticked up, and that's interesting that we've seen some momentum coming into this market to the upside, and that's basically because we've extended the high of this current candle. Now that doesn't really fit too well with our reading of the short-term dynamics with the sellers taking control, so a lot of conflicting signals that we're getting. In terms of the Tenkan-sen, the market is once again trading just below the Tenkan-sen, but we're not seeing a lot of follow-through. We're seeing closes down below the Tenkan-sen, giving us technically a bearish market in that short-term time frame, but we want to see follow-through to confirm that change in sentiment, and we're just not seeing it. And if there is any follow-through, then we do have strong support down at 1675, so really not a market that is a good trading market at the moment. I think we really do need to wait for a breakout up above 1700, and a bullish close up above there would suggest the market may trade to significantly higher levels. But we do have solid support below 1675, but we could find support anywhere down to 1650 and then down to the area where the Kijun-sen is trading at 1637.